All right, let's jump right in. Today, we're looking at Scott Galloway's take on Social Security reform here in the U.S.
Yeah, a pretty hot topic.
Definitely. So we'll cover his main arguments about the current system, what he suggests doing, like income testing and changing the payroll tax cap.
And also how Social Security actually works right now, the nuts and bolts.
Exactly.
Yeah.
And of course, the counterarguments to Galloway's ideas, there are definitely some strong opinions on the other side.
For sure.
And hey, if you find this discussion helpful, give us a like and subscribe. It really helps us out.
Okay, so Galloway's central point, his thesis really, is that Social Security today is basically an inefficient wealth transfer.
Right. From who to whom?
From, as he puts it, struggling young people to well-off baby boomers.
Okay. And he thinks a fair number of current recipients don't actually need the money.
Yeah, he throws out a figure, maybe 10 to 30%. He calls them part of the wealthiest generation in history.
And the scale of this transfer we're talking about.
It's huge, roughly $1.2 trillion a year, according to his figures.
Wow. Okay, so given that view, what's his main fix?
Well, the big one is income testing. You might also hear it called means testing.
And the goal there is?
To focus the Social Security dollars on retirees who are genuinely struggling financially.
So if you've got significant savings or like a lot of passive income.
Exactly. Under his ideal model, you wouldn't receive Social Security benefits.
Interesting. What else is he proposing?
He also takes aim at the payroll tax cap.
Ah, right. The limit on how much income is taxed for Social Security. What is that for 2025?
It's set at $176,100.
And Galloway's issue with that?
His critique is that very high earners, he uses himself as an example, earning, say, $16 million only, pay Social Security tax on that first $176,100.
So the vast majority of their income isn't taxed for Social Security.
Precisely. So he suggests raising that cap, maybe substantially, or even getting rid of it entirely. He floated an idea like maybe applying it only to earnings over $400,000, for instance.
But does he think that alone solves the funding problem?
No, he does acknowledge that just changing the cap might not be enough on its own to make the system solvent long term.
Okay. Now, this ties into a broader point he makes, right? About who the system benefits.
Yeah, he and groups like the Manhattan Institute share this view, argues the system as it stands actually redistributes wealth upwards, not downwards.
How so?
Well, the reasoning is that many retirees today are frankly wealthier than the younger workers whose payroll taxes are funding their benefit.
So it's not necessarily going from the rich to the poor, but sometimes the other way around.
That's the argument, yes.
Yeah.
That it's not effectively targeting need in its current structure.
And this leads to concerns about the future, doesn't it? What happens if nothing changes?
Well, the projections aren't great. The Social Security trust funds could be depleted possibly by 2035. Some estimates are even earlier, maybe 2033.
Depleted means what exactly?
It means the system could only pay out what it takes in each year from taxes, which would likely trigger automatic, across-the-board benefit cuts.
How big are we talking?
Estimates vary, but maybe around a 17% cut. Some analyses suggest it could be as high as 25% for everyone receiving benefits.
Ouch. That really highlights why people are talking about reform.
Absolutely.
So before we get to the pushback on Galloway's ideas, maybe we should clarify how Social Security actually works now, because it's not welfare, right?
That's crucial. It's not a needs-based program. It's structured as an earned benefit.
Earned how?
Through working and paying Social Security taxes. You need to accumulate 40 work credits over your lifetime, which for most people is about 10 years of work.
And once you have those credits,
you can claim retirement benefits starting at age 62, though the benefit amount increases if you wait longer up to age 70.
And the amount you get depends on your earnings.
Yes, generally higher lifetime earnings mean a higher monthly benefit, but only up to that payroll tax cap we mention each year.
Right. And critically, having millions in the bank at retirement doesn't disqualify you.
Not at all. Your assets, your savings, your investments, none of that affects your eligibility if you've earned those 40 credits. That's a fundamental difference from means-tested programs.
Let's circle back to that payroll tax cap for a second.
Yeah.
How does it impact the very wealthy?
Well, like we said, everyone, billionaires included, only pays Social Security tax on income up to the annual limit, $176,100 for 2025.
And income above that doesn't count towards their future benefits either.
Correct. Because they didn't pay Social Security taxes on it, that higher income doesn't increase their calculated benefit amount.
So there's effectively a maximum possible Social Security benefit, even for someone who earned millions every year.
Exactly. For 2025, the maximum monthly retirement benefit someone can receive is around $5,108.
Which is about, what, $61,000 a year?
Roughly, yeah. Which, is a decent amount, but but for someone with extremely high wealth, it might seem relatively small compared to their overall financial picture.
Do all wealthy people who are eligible actually claim these benefits?
Interestingly, no, not always. There was some analysis of Donald Trump's tax returns from 2015 to 2020, for instance, suggesting he didn't claim Social Security benefits then, even though he was likely eligible.
So it's up to the individual.
It's entirely discretionary.
Yeah.
And even if a wealthy person does claim benefits, a portion of those benefits might end up being taxed anyway because their overall income is high.
Okay, that provides good context. Now, let's talk about the pushback against Galloway's main idea, income testing. What are the main arguments against it?
Well, a really fundamental one is the earned right principle. People argue, I paid into this system my whole working life. It's my benefit. My assets shouldn't matter.
Kind of like an insurance program you paid premiums for.
Sort of, yeah. That's a common perspective. Another major concern is that income testing could really undermine the universality of Social Security.
Why is universality seen as important?
Because many believe it's broad base, the fact that almost everyone pays in and expects to get something back is key to its enduring public support and political popularity. Means testing could make it seem more like a welfare program, potentially eroding that support.
Are there practical concerns too, like administration?
Definitely. Critics point out that income testing would add layers of complexity. The current system is relatively straightforward to administer, calculate benefits based on earnings records.
But checking everyone's assets and income streams each
It
year.
would be much more complex and costly. Plus, there's the potential for what some call reverse incentives. People might deliberately work less or structure their finances to stay below whatever income or asset threshold is set just to maintain eligibility for benefits.
Unintended consequences.
Potentially. And then there's the political reality. How likely are lawmakers to pass a reform that completely cuts off benefits for wealthier constituents? It's politically sensitive.
That makes sense. Any other counter-arguments?
Just tying back to the tax cap, some argue the wealthy already contribute less proportionally due to the cap, and their benefits are already capped on the other end. So further restricting their benefits via means testing might seem like double dipping in a way.
So it really complicates the picture when you look at both contributions and benefits.
It does. It shows there aren't easy answers here.
So summing up, Galloway's ideas really force a conversation about what Social Security should be in the long run.
Exactly. They highlight this ongoing debate about financial stability, fairness between generations, especially with rising financial pressures.
The core question seems to be, who should the system prioritize? Is it purely an anti-poverty tool, or is it this broader social insurance program based on contributions?
That's the crux of it, a really significant discussion we need to have.
So just to recap, we've walked through Scott Galloway's arguments for reforming Social Security, how the system actually functions now, and some of the main counter-arguments, particularly against income testing.
And perhaps a final thought to leave you with is this. How do we balance ensuring Social Security is financially sound for generations to come, with that principle of an earned benefit people feel they're entitled to after decades of paying in?
That's the multi-trillion-dollar question, isn't it? Thank you for tuning in.
Yes, thank you. And please do like and subscribe if you'd like to hear more analyses like this one.